Welcome to Something More with Chris Boyd. Chris Boyd is a certified financial planner practitioner and senior vice president financial advisor at Wealth Enhancement Group, one of the nation's largest registered investment advisors. We call it Something More because we'd like to talk not only about those important dollar and cents issues, but also the quality of life issues that make the money matters matter. Here he is, your fulfillment facilitator, your partner in prosperity, advising clients on Cape Cod and across the country. Here's your host, J. Christopher Boyd.
Welcome, everybody, to another episode of Something More with Chris Boyd. I'm here with Jeff Perry. We are both of the AMR team with Wealth Enhancement Group, and glad to have you with us, releasing our show a day earlier than usual on International Day of Charity.
That's right.
What do you think, Jeff?
It's
Who knew?
Labor Day's behind us. The fall is here, and here we are thinking about other things. You know, summer's over for you guys anyway. I'm still here in Florida, but
Yeah. Well, hopefully it continues a little bit, and
yeah, it
September
will
is
be.
still summer for a little bit, but
The
back to
fall is
school and all
beautiful
the
on Cape
rest,
Cod. Yeah,
everything's
the
the
fall is beautiful on Cape Cod.
it's a change in mindset. So with that, we had in mind
Hmm.
putting our attention to this topic today of thinking about charitable giving. And so that's our theme for our show. And
We didn't
which
make
we,
this up. This is actually a thing. This is
pardon me?
I said we didn't just make this up.
Yeah,
We didn't declare this. This is a United
it's
Nations International Day of Charity.
so when we think about this, I think we want to talk about some strategies, perhaps, as we get into our show. Think about some of the preferred ways people tend to try to plan for charitable giving.
Yeah,
But maybe we should start off with a little bit of context, Jeff.
sure.
Um, how do you want to start that?
Well, I think this usually comes up. I mean, lots of people think about charities. Sometimes people think about when something happens, giving
And
a
yeah,
donation in memory of someone, or
yeah,
oftentimes at the end of the year, you'll see a lot of nonprofits soliciting donations and trying to, build up their
getting close to that
coffers.
time of year. Yeah,
That's right. Or maybe in anticipation of an event. In fact, there's an event coming up related to Kristen, your wife,
yeah,
soon,
that's
right?
right.
You want to mention that to start off?
Sure, might as well. So, like, one of the things people do for charitable giving is volunteerism, right?
That's right.
And giving their time, which is one of the ways you can have impact and help the community in various ways. Kristen's very much involved, has been in the Heroes in Transition
She's a board member, right?
organization. She's been on the board, and
Yep.
she has again agreed to be helping to coordinate and lead the preparations for the gala. They have a fall gala um, now 15 years.
Wow.
It's amazing. So this year, the gala, the Heroes in Transition Gala, is going to be on November 2nd from 6 to 10 p.m. at the Coonamessett Inn. Tickets go on sale in a couple of weeks, a week or two. No, actually, mid-September, she said. So that's really
So
right
maybe
around the
next week.
corner.
Yeah,
So anyway, keep an eye out for that. Might as well plug that while we're talking about it. But that's an example of
it
one
is.
way that people can um, be mindful of how they think about charitable giving. It's not always just dollars and cents. It's also time,
Eh,
talent.
Volunteering, correct. Or going to these events, right?
That's right. Yeah.
Right? Buying tickets, bidding at the
Yeah.
auctions. You certainly, at Heroes in Transitions Gala, you certainly see the passion of the individuals in the room and the emotions, and especially during the silent auction when some of the personal stories are told, you can see people
It's always
just,
so moving.
it's so
Yeah.
compelling, the
Yeah.
story and the reason for the charity.
And why they
Um,
do such a good job. And
why and what they actually accomplish with our returning soldiers. Um,
their
it's just
families.
powerful,
Yeah.
and their families. So
Mhm.
yes, so
And
going and spending money is another way to give charities. But most of the time, Chris, this comes up for us in the financial planning setting when we're doing a financial plan for a client,
yeah.
and we're getting into all of the details, lots of details, and one of those is goals for their cash flow. You're thinking about their cash
Right.
flow. How much do you spend a year? Okay, we know how much you spend a year, and the utilities, the groceries, and then we go into specific things. and many times they're related to goals. And one of those goals is often, or two things. One of those goals is often charitable giving,
Yeah.
and sometimes it's because they want to give, and sometimes it's related to saving on their income taxes.
Tax planning. Yeah.
Right.
We tried to remember to, have this as a discussion point. What are the charitable intentions you have? What organizations are you passionate
Right.
about? Causes, that kind of thing. What motivates you? But you're absolutely right. I mean, many times it's a twofer. What drives people's intentions for wanting to do significant philanthropic planning
Hmm.
is tied not only to a charitable intention, but also some tax planning connected to that.
That's right.
And so, it is important to your earlier point that we do a financial plan, have a context of what can we afford? What are we going to need? That old charity begins at home kind of mindset that you do
It's
have to make
important.
sure that you're not going to run out of money and that you have the resources you need when you know you have the resource. And of course, it's important that as part, sometimes people think it's like a value, an important part of their cash flow that they want to prioritize giving on a certain level annually, not just whatever's left over or something like that. So, or some portion of that um, remainderment. Um,
Right. It's
so,
often part of their legacy planning as well. Right.
and I think sometimes it's really part of their value system.
Right.
We know certainly people think about tithing if for their
Hmm.
faith community, or for other purposes. That there's a certain amount that they're accustomed to wanting to donate, and it's not necessarily something they think consider optional. It's part of
Sure.
their requirements of what they spend. This is part of their, so it's
Yeah.
a percentage of what they're willing
Who
to
they
give.
want to be.
Yeah.
Right.
So, but ultimately, we want to make sure that we do things in a way that the forecast of how things play out, we have sufficient resources to that we don't run out.
Right.
Okay. So we want to do a little planning around that. So if that means um,
Well,
wherever we might plan for the money in, money out part of the equation.
yeah,
Yeah.
let me just take a minute and highlight that point, because sometimes we deal with individuals who have this generous spirit and really have intentions of being charitable. And that can be, in this context of what I'm talking about, certainly we're talking about charities, but this could also be family, gifting to
Hmm.
families. And in this general subject,
Yeah.
sometimes people are too generous for their own good, meaning they if they don't have a financial plan and they don't have their cash flows kind of mapped out, and they're just giving as how they're feeling at the moment. Sometimes people can give too much, be too generous to their family, too generous to a charity, which puts their own financial future, their own financial plan, if they had one,
Right.
in
You don't
jeopardy.
want to end up having to go to those charities later on and say, you know,
Sadly true.
teasing.
And
But
part of this is, just mismanagement or miscalculation, but sometimes it has to do with cognitive issues. As people get older, they tend to want to give more money or tend to want to help their family more without a clear perspective on what that might mean to their financial plan long term. And sometimes people live a lot longer than they anticipate.
well, that's true too. And just to feed on that, one of the things you said, giving begets giving. It seems like if you have you ever given to a charity and suddenly you get another request from that same charity
Or
or
another one.
more charities,
Yeah, did you sell my
suddenly,
name?
yeah, right. And suddenly it's like the requests start piling in.
Oh, what's
Um,
that old saying? You give once, it's a gift. You give twice, it's an obligation.
Well, it sometimes feels that way,
Right.
and I think one of the reasons that people should give thought to this topic and how they give is for that very issue, so that it's intentional. There's
Right.
a plan. Um, Thinking about what's of value, what causes, what organizations
Hmm.
are a priority for my value system, what's important to me or us, whatever your family,
Hmm. Yep.
that you really want to be intentional around supporting. And that can be different from one year to the next, or it could be thematic, with consistency, right?
Yeah, it's very
But
individualized. Yeah.
but as opposed to what we often fall into is, oh, I'm running a race. Can you support?
Mm.
Oh, $25 there.
Right.
Oh, I'm somebody died, you mentioned. Oh, we want to support that. Okay,
Yeah.
those are things you want to do.
Sure.
But then come year end, you have like 10 charities. You start saying, oh, I got to write a check to them. I got to write a check to them, and so forth. Right.
Yep.
Now, that may not always be the best way. And when you get some of these things that you go, do I really want to be giving to the, and I keep getting those phone calls for the police fund,
They're not real.
yeah, that kind of stuff.
Period.
Like, yes, I want to
Period.
support the police, but
No. Then
um,
call your local police association, please.
yeah.
Somebody you
So,
know.
so in any case, you go, what, no, and sometimes you're better off to say, well, if you want something, we do our annual giving at this time of year. I'm happy to entertain your interest. Send me something in writing.
I will
You
share
know
a
what I
little
mean?
personal story. You're absolutely right. But when my mother, who's passed, she passed when she was 92. But when she was in her late 80s, around 90, she started having a little bit of issues. She was
Mhm.
still able to live independently, but her
So you're
finances
this?
really needed some help. So I stepped in at her request, and I found literally hundreds of checks that she would give out. Fortunately for her, her value of money changed, in which, you know, she would think $10 was a lot of money.
Yeah,
So she had just
a
she
lot of
gave
little
away a
checks.
lot of checks. It didn't add up to a lot of money,
Yeah,
but it can. It can. So
that's right. That's right. And I think particularly retirees get bombarded with these
they
kinds
do.
of issues. So in any case, sometimes it can be a helpful mechanism to say, "Oh, we do our giving at this time of year.
That's right.
Send it in writing. We'll give it thought when we deal with our charitable giving."
That's
That
great
kind of thing.
great advice. It doesn't you're not saying no, which some people can't do
Yeah,
well, and you're still being thoughtful about it.
yeah. So let's talk about maybe manners of giving. So the writing of a check here and there may
Mhm.
not be the best way to do your charitable giving.
And it's changed since the tax laws have changed too, right?
That's right. You
Because
want to
people
you want to elaborate on that?
right, I mean, before the Tax Cut and Jobs Act, we would write checks maybe whenever, right? And you'd keep a list of them, a folder of them, put them in
Yep.
Quicken or whatever. And that's I use Quicken, so I refer to
Sure.
that often. But so you log everything, your credit card and your bank statements. At the end of the year, you hit Control P, have a list of charitable donations,
Yeah.
send them over to your accountant, and you think, well, I gave some few $1,000s this year, and I get a little tax write off. Well, that's no more, right? So that's part of it, and
So,
also
well, let's talk about that for a minute. A little
okay.
the strategy around that. So, because of the large standard deduction, oftentimes you have to give a lot before you really have the eligibility to have an itemized deduction
Hmm.
from your charitable giving. However, if you are inclined to maybe bundle not one year but multiple years of giving, 3 years, 5 years, possibly even longer amounts, you may get into a position where you say, "Oh, look at this! I by choosing to do this, I've gotten a bundle of deduction that I can now push greater than that standard deduction, and it becomes more valuable to
So
do that as a strategy."
by bundling, do you mean if I was giving $1,000 each year to Heroes in Transition, for example,
Sure.
I would pause and give $3,000 in 1 year?
For 3 years
Right,
instead of for instead of $1,000 each year. That's exactly what I mean by
right,
bundling, right?
right.
So now you tally all whatever the giving is, and you need to really look at your tax return and talk with your advisors, your tax advisor, your financial advisor. Does this make sense? Will this provide me enough to have sufficient value to make it worth doing? But that may be preferable, so that you have sufficient amounts to exceed the standard deduction, and actually get some tax benefit from it.
Right. And this
Now,
plays off with other types of deductions. When the standard deduction is the amount, obviously, that the government gives each individual and or family, and the deductions just aren't charitable deductions or other allowable deductions.
right.
So,
So a little
so
bit of
one
tax
one
planning
one
might be
given year,
involved.
you may have other deductions that you don't normally have
Yeah,
that could.
medical expenses are another example, or there
Right.
could be a variety of things that, could be, worthy of adding into the calculations to
Yeah.
evaluate whether standard deduction is better or an itemized deduction is more valuable to you.
Your theme of talking to your tax advisor makes sense though, because you could put these two principles together, and meaning you have unusual deductions in one year and you have some charitable intent, and if they are in the same year, you could take advantage of that.
Yeah, exactly. A little bit of planning, right?
Yep.
So now, when you have that kind of circumstance, sometimes people think, well, they're still going to want me to give next year. So what sometimes people look to do instead, they look to a donor advised fund. They create this fund. It's a charitable expense in the moment. They
In the
essentially
year that you create it.
in the year that you create it
Right.
and make those donations. But you could, instead of coming out of your pocket for the paying, the charity, you could have it once you've put it into the donor advised fund, you could issue money to come from the donor advised fund annually to the charities you want to still continue to support on an annual basis so that they're still getting the money on an annual plan, but you might be able to do that bundling without an issue, right? So um, that's sometimes why people look to a donor advised fund. A donor advised fund, by the way, great tool, love it. I think it's a great strategy.
Pretty simple
Um,
to set up.
and essentially it is a charitable intention in of
Mhm.
itself, often essentially through what is a foundation or an organization that is essentially a foundation designed for charitable purposes. uh, there's Cape Cod Foundation, the American
Right.
Endowment Foundation, Schwab has a foundation. There's all these different possibilities, right?
Yep.
Fidelity and so forth. So a donor advised fund can be a way to sort of plan your charitable intentions over time.
Right.
We also think sometimes it's appealing because it can encourage you to have the opportunity to have more engagement with family members. And what are our values as a family? Or this, to elaborate, this is something we value. Why don't you participate with us in thinking about where will we give to what causes, what purposes will we give this year?
I love that
And
part of that
it's
because
a
you can.
little bit of legacy planning, right? And
Yes.
passing on values over time.
It,
I
it's
love it too.
it's a good way to get your family members together on a positive note, and it's teaching them your values. Your values of giving, your values of planned giving, and your values of the underlying charities.
Right.
And even maybe some of the family members, to think of children or grandchildren who may not have skin in the game, so to speak, meaning it's not
Yeah.
their money, um, are part of it, and they feel that joy and that satisfaction of being a part of a giving entity.
That's a very good point. That sense of fulfillment,
Hmm.
enrichment, joy, the word you used.
Hmm.
Um, Oftentimes when we're feeling low, isn't
Hmm.
the best thing to get us out of that funk is by doing for others, right?
Absolutely.
And just when we do help with a cause or an organization, you do get a sense of um, just a enjoyment out of that as well. So, in any case, uh, so think about a donor advised fund
Right.
possibly as a tool. But when it comes to the funding of that, whether it's annually
Hmm.
or um, whether it's
One time.
one time,
Right.
one of the things we might want to think about is what should we be giving? Where does the money come
It's a
from? Should
key
I
point.
write a check from the cash that's I've already been taxed on? I now have in expendable resources or should I use other
Or
resources?
even worse, selling something and having a capital gain and then
Receiving the
donating
capital
it,
gain and then
right?
donate. Yeah, absolutely not the right way to do it. So let's
Right.
talk about some of those. You have something in mind, obviously. Go ahead and elaborate on that.
Well, many times we see clients who have this charitable intent and they have this aversion to taxes, right? And so they may have a legacy position, a long time holding in their portfolio that they bought. Maybe they were brilliant and bought Amazon 20 years ago. I don't
Sure,
know,
let's
right?
use that just as a hypothetical.
Right.
It could be any highly appreciated asset, could be real estate, could be stock, but let's use a name like that just for an
Because
example.
people know it, right? So they
Yeah,
bought a few hundred shares at a few $100 each, a few $100 period of Amazon, and it's grown and grown, and it's worth, for example, I don't know if this would be the math,
yeah,
but
yes.
$100,000 today, right? And they're
Yep,
thinking
we're
that they're
city
up.
rich. Why didn't we buy more? Yeah, okay.
Why didn't I buy any?
Yeah, yeah, right.
And they have this charitable intent, and they're thinking about doing something along the lines of what we're talking about. Um, they don't need to write a check from their cash, or they don't need to sell this Amazon stock to be able
Right.
to contribute that asset and pay the capital gains taxes on it. They can actually donate, right? Is
Yeah.
that the correct word?
Yeah.
Donate those shares of stock into the fund, into the charitable fund, and then use those assets 100% tax free for that transaction.
But Jeff, I love Amazon. I don't want to give up Amazon.
All right,
So
well, keep
buy
some of it.
more. Use the cash to buy new shares.
Yeah,
But instead of having that highly appreciated tax consequence looming,
that unrealized gain, which
that
that's a
unrealized
political decision
gain,
coming.
like give the appreciated stock when the charity receives it, whether it's
Mhm.
the donor advised fund, the charity directly, they don't pay a capital gain.
That's right.
Because they're a nonprofit, the tax treatment they get is different from what you get. So no need to pay that capital gains tax. Have it be a gift to the charitable intention, however you're doing it, donor
Mhm.
advised fund directly to the charity, and you will avoid that capital gains tax. The full value is recognized, and it can ultimately be given away in full value, and they can turn around, sell it, and use it.
And
Okay.
we
Or if they
implied
want
it.
to, suppose they could keep it if they wanted to.
Yeah, they could. We implied it, but we didn't say it. And the full value of this $100,000 worth of Amazon stock is deductible.
Yeah. Yeah. So if it's an after tax, yeah, you're right. If it's a non qualified account, you can
Right.
then get a deduction. Let's talk about what about if you're over 70 and a half? There may be an even better option in
Mm.
some instance if your amount is up to $100,000 of charitable intention
Tell
in a
us
given
about it.
year. It's a qualified charitable distribution, which when you get to a certain age, and it used to be 70 and a half, now it's 73 or 75, depending on if you're born before or after 1960.
You're in the
January
RMD
of
discussion right now,
1960.
right?
Yeah, you'd have a
Yep.
required distribution.
Hmm.
So, but because it used to be 70 and a half, the rule still applies. They've left it alone at 70 and a half. You can take money from your retirement account, your IRA.
I see.
Uh, I think it has to be an IRA to be clear, though. I'm not sure it can be anything like a 401k or something.
Hmm.
It has to be an IRA. But you can take it from your IRA and make a contribution directly, a qualified charitable distribution. So it's a
Hmm.
form you fill out basically, and it goes from your IRA directly to the charitable intent, similar to what you described in the other example when you're giving stock, which goes directly.
Sure.
You're not selling it first. In this case, you're not taking possession of the cash when you have a distribution from the IRA and then you're giving it directly. But it counts when you do it through this proper, form. It counts as a distribution when you have a distribution requirement. So it could help to alleviate or eliminate your required distribution amount
Yep.
in a given year. So, what's the virtue? Which is better, giving appreciated stock or giving qualified
Well, it
charitable?
depends, right? I mean,
It,
if you have to take the RMD anyway, and you're going to pay taxes on the RMD, and you are going to make a charitable donation in that same year,
Yeah.
then why not do the RMD, the
Yeah,
qualified distribution?
I think generally, if you're eligible for the qualified charitable distribution, money that's entirely subject to tax,
Right. Either
you're
way.
better to use that money
Hmm.
than the capital gains money, which is largely subject to tax,
Right.
right? So, you're and the tax rates, the qualified charitable distribution is income taxed money,
Hmm.
whereas the capital gains rate right now, at least, is a lower rate of tax. So, given the choice, if you had, oh, I could either do this or I could do that, use the qualified charitable distribution from your IRA generally, um, as the preferred option because of the tax consequence. Although, as you said, it depends. What are the other dynamics? For example, you've got this over emphasis on a given stock or something.
Well, that's true.
You might say,
Yeah.
oh, well, I'd really like to,
Too much risk there, right?
yeah, things like that. There
But
could
I
be
don't want to pay the taxes.
right, right, exactly. So that could be one consideration.
And the qualified distribution from your RMD isn't an all or nothing thing. I think you maybe alluded to it, but just for clarity, if
Yeah.
you had a $10,000 RMD in a given year, you don't have to say, is this for charity or not? You mix
No.
it up
Yeah.
however you like,
You could do $2,000 to your charitable intentions and
right?
take the $8,000 that remains for your distribution requirement, or whatever you might want.
For people who do planned giving like every month, maybe, just to think about it, maybe it's a church, maybe this is how they
Oh,
tithe.
yeah.
It's the perfect way because it's easy calculated and it stays with your monthly giving pattern.
The qualified charitable distribution, I'm not sure that's actually a good question. I think it become do you know this for a fact that you could do
No.
monthly? I think it would be a pain in the neck to have to fill out the form every month,
Oh, okay.
and do it that way. But because it's not like a systematic distribution like you could do for yourself. I think with the qualified charitable distribution, you have to. It's a one off each time. So
Okay.
um,
I assumed you could do it monthly, but I don't know.
hopefully they get that set up. That would make a lot of sense, wouldn't it?
Yeah.
Yeah, but I don't. At least the one that I've seen, I haven't seen it have that option. Uh,
Well, don't people, just generally speaking about the principle, don't people take RMDs and not only once a year? They
oh
take
yeah,
them. So
in
that's what
monthly
that's what I
increments.
that's what I had in my mind, that would be
Yeah,
possible.
yeah,
But
it
maybe
it totally makes sense, but it's essentially that they haven't set up the form with that kind of a
well,
structure.
I learn something every day.
Yeah, too bad, right?
Yeah.
Maybe they will in time.
Let me
Um,
write to somebody.
yeah, let's talk to somebody about that. I would say let's also talk about charitable remainder trusts as a tool, charitable annuities. Um, the, these are kind of two sides of the same coin.
Hmm.
But again, I think of these more with appreciated assets, but we sometimes refer to charitable remainder trust as capital gains avoidance trusts, because oftentimes that's part of the driver, part of the motivation.
Sure.
Rarely do people come in and say, "Hey, I'm thinking about giving to a charitable intention. Um, how can I generate income for me too?" Like you know what I mean? But that's ultimately what happens with a charitable remainder trust. And there's an avoidance of capital gains, right?
Right.
So a lot of times it's this dual, I do have charitable intentions, but I really want to avoid that capital gain. Let's take that Amazon stock example. And somebody says, "Yes, I'd like to give it away, but I'm not sure I want to give it away because I might need it."
Right. Or at least the
So
income from it.
so what they often do will give away essentially the principal in the form of this moving the stock into a trust, or sometimes done with the charity directly through an annuity, a
Hmm.
charitable gift annuity. But let's talk about the charitable remainder trust, capital gains avoidance trust. I take an appreciated asset. I put that asset into the trust. It's a donation now. It's gone. It's not mine anymore. It's
It's
the charity.
irrevocable.
Irrevocable.
Can't change your
However,
mind.
the charity can be set up where I get some form of income, and it can be the same amount every month, or it could be fluctuating based on the value of the account.
And does
Okay.
the donor set up that amount, or is it regulated?
It's part of the way the whole process gets structured at the outset. When
Hmm.
you set up the trust, you have to make some decisions, and it will impact how much you receive over time
Hmm.
as income, and how much charitable benefit you get from the tax deduction that you'll get. And
I was just trying to avoid the people, answer the question of the people who are thinking that they can get it all back in 5 years.
you might not get it back in 5 years, but oftentimes people will receive very possibly the value of
Hmm.
the current value of that investment over time
Hmm.
in the form of income,
Right.
but they are giving up the appreciation or
The
potential
gains.
future
Right.
value, right?
Yeah. Right.
So now in the process of doing this, what happens is the trust receives that appreciated stock. Now, because it is technically considered a charitable entity,
Hmm.
it can make some changes. There is some tax implication to the um, recipient of the income, the beneficiaries of the trust, the income beneficiaries of the trust, where they get that capital gains portion of that is distributed to them as they receive income to get the huge gain, do some time, but it's modest and it's
Hmm.
spread out. So it can be appealing, right? That they have the benefit of not having the big capital gains tax all at once, but they and capital gains treatment over time gradually. So
And they
that's
get
pretty
the
cool.
deduction.
And they get a deduction. Now it's not
Right.
the full amount of
Hmm.
the 100,000 in our case with the Amazon stock,
Right.
because not all of that is going to go to charitable intentions. Some of it is going to be benefiting the donor, right?
Sure.
So you get a large portion of that as a deduction, but not all. Okay. Now, it's happened over time that people gotten all this tax benefit and lived a long time, and there
Hmm.
hasn't been money left over to give to the charity, and that's okay. That can still be permissible. However, it's probably not what people intended. They
Right.
and some of it to go to charitable intentions. These are things that get a little complicated and in the weeds. If you have a case like this, we have some good software and uh, help in the process that we can talk to you about trying to figure out, should I think about this? What are the ways to deal with it? This is something we often talk with my brother about as well at
Hmm.
Boyd and Boyd,
Right.
um, which they deal with these as well. And but it can be a great tool, great resource for people who have highly appreciated assets, real estate, stocks, whatever it might be, and might want to avoid some capital gains or mitigate some of the capital gains while still having a charitable intention as a component of it, but not the entirety of it. Makes
Very
sense. So
good.
now I've got an income stream for life
Yep.
for me, and maybe for me and my spouse. I
However you
could
set it
have
up. Yep.
I could have other people as well if I wanted, but it will affect what the tax benefit is of this.
Yep.
But you get the gist. Like, there's a lot of flexibility, and the same concept can be done with a charitable gift annuity with a single charity,
Yeah. Specific charity.
a
Right. Yep.
specific charity. If I have the amount I have might affect how I want to deal with this, because the trust could choose, multiple charitable intentions, perhaps, or singular, but it might have a little more control in the process. Whereas the gift annuity, charitable gift annuity, is going to be going to a singular charitable intention. Um,
So this depends on,
like,
in part anyway, the amount of money that you wish to dedicate to this purpose, right? If you
yeah, I
have,
think so. How
if you have,
much you're dealing with.
yeah. Do you have a round number that you'd like to share?
I don't I think that's gonna be a question of what's the cost of the trust?
Right.
What's the cost of the maintenance of the trust? Because there's a trustee involved, and that's not you in this case. It's, a either a professional or someone else, and there's some cost potentially for that.
Yep.
So, I wouldn't think if it's under, 200,000, a hundred
Yeah.
thousand would probably be, I'd probably be inclined to look toward charitable gift annuity for an amount in that neighborhood. If it's more than that, maybe I'd start looking at the charitable remainder trust, price it out, see what's the benefits, pros and cons. But if you get over a couple 100,000, then it's probably worth thinking about, is there enough benefit to do that approach?
I guess not just the amount, but your goals too. You may just have one charity, right, that you're
Yeah, that might
interested
be
in,
fine.
right?
Right.
But if you have a slew of them,
It's
then you
also how much awareness, or when I set this up, how do I want to set up, what's going to happen with that money? I mean, it's ultimately the trustee's decision, but when you're setting it up, you can kind of trust. You can be like, I kind of want this to be treated in a way that's more aggressive, less aggressive, whatever. But the charity, you're not going to have any involvement in that.
that's
That
right.
they're making a promise. Here's what it is. You know.
Yep. Yep.
Um, so in any
But there's
case,
lots of options, as I think our listeners just heard. I mean, we've talked
yeah,
about three plus solid options for people who can save some money on their taxes, have a charitable intent, and perhaps involve their family members.
lots of good offerings
Hmm.
and ways to think about it. Um, you don't see this one anymore. I had a client who had a charitable income fund. A pool, they called it a pooled income fund. At what that
Hmm.
time it was through Oppenheimer, and later Fidelity took it over. But I don't see this offered too often. And it was another idea that was pretty much similar to that charitable remainder trust kind of notion. The money got taken from this investment, put into another, and they got income for life. And
Hmm.
and it would, as that fund would move up and down, it would grow or
It
shrink,
was
but
variable.
yeah, but it
Yeah.
was ultimately the cash flow that it generated would be sent out to them as an
Hmm.
income stream. I have one client who still does that. But in any case, lots of interesting possibilities. Hey, this is fun stuff. Let's face it. If you if you're in a position where you've got charitable intentions, you've got maybe appreciated assets or significant retirement account resources. Um, these are kind of fun conversations to be thinking about. What's the best way to do this?
It is. It's also a great example of why when you work with a financial advisor who's a fiduciary and understands you and knows you and you can share your thoughts and feelings and goals with, that you can come up with situations that maybe you had never heard about and thought about, that you can, in this case, be as generous as you had planned to, but you can also have a plan about it and save
Maybe get
substantial
some
income
tax benefit
taxes.
in the
Yeah,
process. Yeah.
absolutely.
Well, that's some food for thought on International Day of Charity.
Yes, be
Um,
charitable, however it is. And if you want to be charitable, join the Boyds at the Heroes in Transition Gala.
we'll look forward to seeing you there. November 2nd, from 6 to 10 p.m.
Yep.
With that being said, everybody, thanks for being with us this go around. Until next time, keep striving for something more.
Thank you for listening to Something More with Chris Boyd. Call us for help, whether it's for financial planning or portfolio management, insurance concerns, or those quality of life issues that make the money matters matter. Whatever's on your mind, visit us at somethingmorewithchrisboyd.com or call us toll free at 866-771-8901. Or send us your questions to amr-info@wealthenhancement.com. You're listening to Something More with Chris Boyd Financial Talk Show. Wealth Enhancement Advisory Services and J. Christopher Boyd provide investment advice on an individual basis to clients only. Proper advice depends on a complete analysis of all facts and circumstances. The information given on this program is general financial comments and cannot be relied upon as pertaining to your specific situation. Wealth Enhancement Group cannot guarantee that using the information from this show will generate profits or ensure freedom from loss. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions.